Do you know that accepting pre-approved credit cards can be tricky? Here is a beginner's guide to the credit card pre-approval process. We'll explain what are the pros and cons of credit card pre-approval, what approved credit card means, how credit card works, why your credit card application can still be rejected, even if the issuer, in this case the bank, has already sent you a new credit card in the mail. We'll focus on uncovering some credit card facts, demystifying the application process, giving you useful tips, using pointers and caveats, and finally, give you a step-by-step guide on what you need to do when you get a new credit card offer. Feel free to jump to the end to watch the hack on making an informed decision. Your time with us is very important. So, let's jump right into this finance video. You may have received that enticing, pre-approved credit card offer in the mail. But what exactly does it mean? Well, it indicates that the credit card issuer, the bank using a soft credit check, has reviewed your credit history and they has determined that you meet some of their initial approval criteria. This pre-screening process is a crucial first step in the credit card approval process. Now, let's weigh the pros and cons of pre-approved credit card offers. Initially, the pros, the positives. First, you have a higher approval odds. True, these offers increase your chances of getting approved for a new credit card. Second, you get better terms. You could enjoy lower interest rates, higher credit limits, and special introductory offers. Third, your credit score gets a boost. Using credit responsibly can help improve your credit score over time. Fourth, you get better rewards. Most pre-approved credit card offers come with increased reward earnings, including an enticing welcome collector points bonus, a lower balance transfer rates, a lower interest for the first year. Now, comes the cons, the negatives. First, beware of misleading terms. In one sentence, pre-approval doesn't guarantee the best terms. Be wary of hidden fees or less favorable conditions. Second, be conscious of overspending risk. Having easier access to credit might lead to overspending and accumulating debt if you did not manage debt carefully. Third, you might see more unsolicited offers. Be prepared for potential junk mail overload in the future. Be on guard against identity theft risks. Fourth, brace for a little credit score impact. Applying for multiple pre-approved cards in a short time can negatively affect your credit score due to multiple hard inquiries. Fifth, there could be limited choices. You might be confined to the pre-approved options, potentially missing out on better credit card choices available in the market that fits you better. Sixth, find out what the annual fee is. Note, some pre-approved cards carry big annual fees that could outweigh the benefits, points or rewards that it provides. Last, beware of predatory practices. In general, be cautious of unscrupulous lenders targeting vulnerable individuals with misleading offers. Read the fine print carefully. In this second portion, we now untangle some confusions on pre-approved credit offers. I use questions to help you better understand these pointers. Let's quickly dive right in. Point number 1. Could you be denied a new credit application after you are offered one by the bank? Well, it turns out that each credit card company has their own internal policies and application restrictions. These criteria ensure that you meet certain qualifications before being approved for a new account. This means yes, you can be denied on your application. For instance, let's take Chase's unpublished 5/24 rule as an example. This rule restricts consumers to get approved for a new one when they have opened 5 or more credit cards within the last 24 months. These internal policies can affect your eligibility and cause a reversal on your credit card pre-approval. Point number 2. Does pre-approved means there is no credit check? This is a common misconception. Pre-approved offers do not imply a complete absence of a credit check. The issuer just didn't tell you that they did a soft credit check. While you are happy to receive a pre-approved offer, the credit card issuer will conduct a hard credit check as part of their final application process. Point number 3. Note: another factor that could lead to a denial of your credit card application is debt-to-income ratio issues. Your income doesn't appear on your credit report. Your income is a crucial factor for assessing your ability to manage credit. This means that when you are initially pre-approved, the card issuer lacks a comprehensive view of your financial situation. It's only when you submit an official application that your income is factored in. If your income doesn't align well with your existing debts, it could cause a denial of their credit card offer. Point number 4. Credit card companies closely monitor your credit profile. If they observe recent changes that suggest increased risk, they might reconsider their pre-approved offer. This includes incidents such as recent late payments, lower credit scores, higher credit utilization, or multiple new credit inquiries within a short period of time. It is important that you maintain a positive credit history. Point number 5. What is my credit limit? When you're pre-approved online, you might receive a quick response indicating which cards you qualify for, including the potential rates, your credit limits, and annual percentage rate, APR. It's a convenient way to gain insight into what you might expect when moving forward with the formal application. Lastly, some fun facts about credit card companies. Even though most of the revenue of credit card companies comes from the transaction processing fees, which amounts to 80% of MasterCard's revenues, the remainder of MasterCard's revenue comes from what the company unceremoniously calls other revenues. This umbrella of other revenues, called miscellaneous services, is MasterCard's fastest-growing revenue category. Last quarter alone, this category accounted for $724 million in revenue, a 21% year-over-year increase. This revenue category includes several products and services that MasterCard offers to its card-issuing banks. Examples of these additional services are data analytics, loyalty and reward program management, fraud protection services, plus consulting and research. Even though there are roughly the same MasterCard and Visa credit cards active users on both networks as of 2020, Visa's credit payment revenue volume is twice that of MasterCard's, $1.97 trillion versus $837 billion. Visa is twice as big in this measure. Fact: there was credit card usage slowdown in the pandemic-related lockdown months. New technologies on issuing credit payments will likely have an impact on these companies' revenue growth. This will clearly affect the future revenue of the 4 biggest credit payment systems: Visa, MasterCard, Amex and Discovery. We'll see how these companies adopt and how this plays out. Wait, we're not yet done. There is more in our Part 2 video. In the next video we're explaining the cautions and caveats of pre-approved credit cards. Yes, you must be careful and watch out for some of these red flags. Click the link on this screen to take you to the second part of this video series. If you liked this video, hit the like icon and subscribe to this channel. We welcome comments. What are your personal experiences on your credit card applications? Was it easily approved? Which banks gave you pre-approvals? Did you have unexpected things that happened? What benefits did you get from those credit cards? Tell us your stories.